Thank you.
Okay, respected guest speaker, Mr. Kamlakar Sai Palavalsa, esteemed dignitaries and my dear students, a very good evening to one and all. I, Dr. A. Mary Francina, Director MBA Department and member of Incubation Cell, welcome you to an expert talk on process of innovation development and technology readiness level and commercialization of lab technologies and technology transfer, organized by St.Ann's Incubation Center under the initiative of Institutions Innovation Council. I request the dignitaries and all the student participants to join us in prayer to invoke God's blessings. I request Miss Samantha Carroll from MBA first year to lead us into prayer through scripture reading. Over to you, Samantha.
Good afternoon, everyone. Today's scripture portion is taken from the book of Proverbs, chapter 3, verses starting from 5 to 8. Trust in the Lord with all your heart and lean not on your own understanding. In all your ways, submit to him and he will make your path straight. Do not be wise in your own eyes. Fear the Lord and shun evil. This will bring health to your body and nourishment to your bones. This is the word of the Lord. Thanks be to God.
Thank you, Samantha, for leading us into prayer. Tim Castell writes, innovation is not just having an idea, but executing it so that it creates value. Innovation incorporates three key concepts: idea, execution, and value creation. Today's expert talk is highlighting on varied aspects of innovation, value creation, technology readiness, and technology transfer. To talk about these, we have with us expert Mr. Kamlakar Sai Palavalsa, founder and group CEO of Microensure. It's my privilege to introduce our resource person of the day. Mr. Kamlakar is a mechanical engineering graduate from AU with a master's degree in business administration from Osmania University. Sir started his career in engineering design and development with Hindustan Machine Tools. With the opening of the insurance industry, Sir joined Birla Sun Life Insurance as a founding member. He was also founding member of Reliance Nippon Life Insurance and India First Life Insurance. In 2014, Sir has set his own consultancy firm, K4, which works in building distribution networks and taking products to market. He worked as the managing director and CEO of Geo Sansar, a company promoted by the MetDist Group. Sir today is working in building his new venture, Microensure. Microensure is a technology-led insurance consulting and distribution firm which works with insurance companies and intermediaries to build products and process for the underserved and unserved. He is also director on the boards of Velicom Finance and NBFC supporting micro and small enterprise, and also member of Ingenious Education, which provides preschool education through the Canvas brand of schools. Sir has, to his credit, winning 101 topmost influential BFSI leaders in India for 2019 by ET Now World BFSI Congress. Sir's hobbies include teaching and engaging with youth in building robust technology and distribution networks to take financial products to the chosen segment. Sir worked as a part-time faculty in Osmania University College of Business Management and is also a research scholar with the University of Madras. With this brief introduction, I welcome Sir to our college. Sir, please accept our virtual green greetings.
Thank you very much.
Sir, over to you, sir. Now you can take over.
Yeah, thank you. So, Let me just see.
Yeah, sir. You can share your screen now.
I'll just share my screen once. Yeah, you're able to see this?
Yes, sir. It's visible, sir. If you can make it as a
I'll
slideshow.
just make the slideshow. Yeah, sure. This is fine?
Yes.
Okay. So the topic is quite, as I said, the topic is quite, I thought it was more of technical in nature for a person like me who is more into the financial services and especially on the sales side. Because sales is a very important aspect of any any bank or any finances. BFSI here means banking, financial services, and insurance. So many of our students would like to be in the BFSI space, but effectively, majority of them whom I have met in my life have always said they don't want to do sales. They always wanted to be in operations. So that was the first. Even I also, when I started my career, because I'm an engineering graduate, I started my job in a machine tool division. But later on, I realized that I will not be fit for engineering. Just like any parent and student in those days, that means in 90s, 80s and 90s, everybody from Andhra and Telangana was either an engineer or a doctor. Very few people, if you're not an engineer or a doctor, then they used to say that parents used to look at you in a different way. But now the opportunities are different, so the trends are also quite different. So just to start, before we start, because you might feel completely out of place, all of you, because you're all young children and young people and no experience, no exposure to this segment at all. So some statements and some things which I will introduce you to a certain set of statements before we start the actual presentation. So you'll have some idea, not necessarily the full one, maybe if I say 1%, 2% of the entire knowledge of the insurance space. So I have spent nearly 30 years in the BFSI sector now, around 7-8 years in the stock market. I worked in the stock trading and also in the money market segment. Money market is a very, what should I say, very, the job is very taxing. So people normally lose their hair and people tend to look older in the money market space. So maximum 2 years, 3 years, if a person has worked as a trader in the money market space, then normally people walk out of that particular role and move into a different role. So I also did the same thing. I was there in money market trading for around 2 years in Bombay. The good thing I did after my MBA was that I moved to Bombay. I did not stay back in Hyderabad, though I had an offer from Nagarjuna Finance. I keep repeating this whenever I do anything. I had an offer from Nagarjuna Finance as an investment banker, and I had one opportunity in Bombay as a trader. And one of my professors, who is still my guide and who works in Institute of Public Enterprise today also, he's around 70 plus. He told me, "Are you mad? Just move to Bombay. Don't stay in Hyderabad." So that was a very, brave decision for a person who comes from a small village in Vijayanaram district and who did his studies in Telugu medium and then moved to an English medium school and then all that. And it was when I moved to Bombay, it was a defining moment for me. That is what makes a difference, because Bombay is the financial services capital of the country. So a lot of things happen in Bombay. Now it is a little bit different, because in those days it was different, and now a lot of opportunities coming up in various places. But still the financial services capital of the country is in Bombay. If you want to be in the financial services field, preferably you should be in Bombay in your initial stages of your career. That is what has happened to me. Then 23 years I have spent in the insurance field. Insurance is a very dynamic field. It's one of the largest financial services industries in the world. If you look at the Indian market, let us say, the largest company, if any one of you would tell me, I'm sure nobody will tell me that it is Life Insurance Corporation. Okay, because all of you will tell me whether it's Reliance or some bank or something like that. Very few people will maybe tell me that it is Life Insurance Corporation. So if you look at it, Life Insurance Corporation is the largest insurance company, largest company in India. When it comes with its IPO, shortly, when you will see that the valuation will be anywhere between 15 lakh crore to 20 lakh crores is what is the expected valuation of LIC. So that is the largest thing across the world. It's always that insurance companies have set up banks, insurance companies have set up mutual funds, but in India it's the other way around. That is, banks have set up insurance companies. The reason for that is banks have got privatized before. Okay, so that is the thing. So I had spent nearly 20 years, first 20 years of my career, or sorry, first 16 years of my career in setting up 3 insurance companies in the country. So I was the founding member of 3 insurance companies in the country. So normally, if you have seen my profile, which Madam gracefully explained, I've always been a startup person. So normally, after working for 4 or 5 years in an organization, I normally feel a little bored and then move to a new organization where I have an opportunity to set up. So I'm more of a startup person rather than a maintenance person. So you require different types of people in an organization. So that is one. So 15 years I spent. The last job which I did was, I was the MD for the CEO for Manappuram. I'm sure all of you know Manappuram. It's a gold loan company. I was the CEO in Kerala for 3 years, and then from Kerala I came back to Hyderabad for doing something which I was interested in. But because of COVID and the Chinese aggression, I'm doing something else. So that is destiny, to be precise. This is what happens, because of destiny. So today, what we will do is we'll divide this. I think it's 1.5 hours or something which is allotted. So first 20 minutes, the first part of the presentation, we will talk about what are the technology interventions that are happening in the insurance space. So first 3-4 slides will give you some idea about what is insurance, and then what are the technology interventions that are happening. That's a large segment of the thing. And part 2 is what is it I'm doing differently than what others have done. That is what I think is the major part of your incubation piece. How I have started to build this organization. Today we are around 40 people strong, and we service nearly around 350,000 customers, which I will talk about. And then we will leave it out to questions. You may please, ask questions at the end, which would be easier for all of you. You may write it down or whatever you want, you can do that.
Sir,
Okay,
sir, sorry to disturb you, sir. Yes. Sir, your voice is very low and there is some disturbance from your side, sir. It's not clear.
Yeah, is it okay now?
Little, like voice is low, sir. If you can increase the volume.
Just a second. Yeah, you can hear me now?
Yes, sir.
Okay, thank you. So what we are going to discuss is what is the product which we are talking about. So you will have some idea about how a product is taken, what is the product. Then how is this product taken to customers? Then what are the technology interventions that are happening? Because this industry is nearly 350 years old. Not 350, around 500 years old. The first insurance company was Lloyd's, which was started under a tree in London. So from there it has all come up. So a lot of things which are there in the industry, which many of you will be knowing shortly, or you can read about it. It's available on the web. Then what is the model that I have adopted and how I am taking it to market? What are the technology interventions that are happening? How we develop the technology within our, within our environment, and then how we have taken it to it. What is the, what should I say? What is the opportunity that was available in the market, which was basically a negative trait which was there and which we converted it into an opportunity. That is what we will explain. Okay, so first thing is, what is insurance? A simple definition of that. Insurance is a means of protection from financial loss. Normally, people call it, we should take health insurance, we should take life insurance, we should take motor insurance and all. It's a misnomer. The name is a misnomer because by taking life insurance, I don't protect life. By taking motor insurance, I don't protect motor. By taking a health insurance, I don't protect your health. By taking any one of these insurance, I only protect the financial loss that would have occurred to you because of you not being in normal shape. That is the only thing which is insurance. So insurance is a means of protection from financial loss. Okay. It's a form of risk management primarily used to hedge against the risk of a contingent or uncertain loss. For example, let us say what is the insurance that was there during COVID by your college to all students? So let us say what was the actual activity that was supposed to happen? Actual activity was that you were supposed to attend school or college. Every day you were supposed to have college from 9:30 to 5:30 or 3:30, whatever the timeline is. And you had professors coming to you, personally meeting you, talking to you personally, having a chat with you. If you are down, filling you up, if you are having some issues, sorting it out and all. That was the normal model of instruction. Now, suddenly one fine day, the colleges realized that it is not yet possible in the next maybe 3 months, 6 months to do this physical form and continue your life in the normal way. So what we have done, we have shifted ourselves to a new age of communication, which is basically the online age, the online way of communication. So that is how we have built a product to cover a existing product, which is how you are ensuring the education of yourself through your college. So that is how insurance is built. So it's a form of risk management primarily used to hedge against the risk of a contingent or uncertain loss. You don't know the loss, or you don't know what could happen. So for an uncertainty, you are trying to hedge against the risk of an uncertainty. So an entity which provides insurance is known as an insurer or an insurance company, insurance carrier, or an underwriter. So there are around 54 insurance companies in India and close to around 600, 700 across the world. A person or entity who buys insurance is also known as an insured or as a policyholder. Okay. And the people who carry insurance to you are basically distributors. So there are different types of insurance products. Life insurance, which I said is a misnomer. It only covers the financial loss that might arise to a family in case of anything happening to the earning member of the family, especially the earning member. Okay, it could either be, I call it the 4 Ds. 4 Ds means death, disability, disease, or destitution. Any of these 4. Okay, so something happens, then that is all. So health insurance includes personal accident, critical illness, and any financial loss that might occur because of anything happening to your health. You fall sick because of COVID or any other reason, then this one. And general insurance includes property, fire, travel, liability, and all this cattle, agriculture, and all that. Where life is not involved, that means human beings are not involved. It all comes under general insurance. Many of us, let us say in Hyderabad and Secunderabad, we can easily decide that 99% of our homes are not insured. That means we will build a house on a certain lake bed or something like that. Some decades ago, it was a lake bed. And in the process, we have built a road there. We have converted that lake into a housing colony and all. And recently, you have seen how Hyderabad floods had happened. How can somebody imagine Hyderabad not having a water body or major water bodies being in flood? Now, this has happened basically because the environment has been changed dramatically. The environment here is basically the area where you are living. That environment you have changed dramatically to suit your requirements. The environment is hitting back at you because the water body, excess water used to drain out to a certain way. It is not getting drained, so it comes into your house. Now, when it comes into your house, there are so many things which get spoiled. So many of us are not covered. None of us are covered. That's why majority of our people are dependent on government support. So I don't know how many of you have seen the elections in Hyderabad for mayor. I think one of the parties said 15,000, another party said 25,000, another party said 50,000. So that is what, if you are taking an insurance policy, you won't have to wait for the doles of the government. We can do it, we can cover ourselves. This is just the product. Normally, this is an unsought product. I'm sure because all of you are MBA students, you know what is meant by an unsought product. An unsought product is one, just for repetition, where nobody wants to buy it, but everybody wants it. Okay? So everybody wants it when it is required, but nobody wants to buy it. So because nobody wants to buy it, it has to be sold. And how it has to, because it has to be sold, it is a very tough thing to sell. And because it's a tough thing to sell, a lot of salespeople, actually people who join the insurance sector, in the sales side, they actually drop out and move to other areas. The people who succeed in the sales side of the insurance business, they normally succeed in every aspect of communication and selling. So normally you are either not covered or not adequately covered or wrongly covered. Very few customers are there who are adequately covered. So what do we mean by an adequate cover? That we can discuss some other time, but normally it is 10 to 15 times your annual income that comes into your house. So that is what you need to cover. So this is the basic, this is the insurance is necessary for all customers. However, now none buys, so it has to be sold. So this is the basic understanding about the product. So how is it sold? Because the nobody buys, so it has to be sold. So people have to be, the product has to be pushed to the people. So worldwide, the initial thing how it used to happen was through individual agents. Individual agents means there used to be a neighborhood agent, and up till early 2000, this is what used to happen across the world, where agents used to be there. For example, in India, there are nearly 2 million agents who are registered with the regulatory authority as an agent and sell policies. And they're very rich people also in the agency business. It's a very lucrative business to be in. So a lot of money is made. Then what happened is, then people started thinking, why can't we sell products from other institutions which are in the financial services space? So in 2002, when I was in Birla Sun Life, we started, the first bank started selling insurance, which was Citibank. So we were the pioneers in selling insurance through the banks in India. So when we started selling through the banks in India, we immediately also realized there are other institutions which also, through which we can also sell, which are non-banking finance companies and affinity groups. Affinity group basically means people who are together. For example, all students of St.Ann's are an affinity. Okay, so I can design a product exclusively for the students of St.Ann's or the parents of students of St.Ann's, and we can do a product. So that is an affinity group. Then the next segment which came was the OEMs. OEMs means original equipment manufacturers. Original equipment manufacturers like Hyundai or Tata's or any of these motor companies, Maruti and all. If you have seen the Maruti Suzuki's balance sheet, I don't know how many of you have seen. If you have seen that 20-25% of the revenues come from insurance sales, because the insurance sale is mandatory for a new vehicle. So they have decided, okay, this much revenue additional is coming to us. Why can't we do it on our own? So they all became insurance distributors. So Maruti is one of the largest insurance distributor in this country. Maruti Suzuki or Hyundai or Tata's or any one of these. And the next one was contact centers, direct sales. So physical direct sales used to happen where people used to sell through contact centers, venue marketing, all this they did. And finally, they came to online sales. That is where technology got into play, which we will talk about. That's the reason of your topic. And assisted sales was assisted sales basically means you log in online, you do your research online, and then somebody calls you to assist you in closing the sale. That is basically assisted sales. So up till 2000, you had only individual agents selling across the world. Today also in US, individual agents sell well. In European markets, it is banks that sell differently. That's bank assurance it's called bank insurance sold through banks is called bank assurance. So 2004 onwards, we started going to other institutions. Then 2010 onwards, somewhere around 11, 12, 13, technology started playing a major role in this business. So the front end sales, everything has become technology driven now, which we will talk about. The sales process is very simple. Okay, there are 4 stages to the sales process. This is why I am trying to tell you all this is because as you're getting into technology, this thing will be able to relate there. So you have a lead generation. That means you have data from which you generate a lead, and then you have a lead warning. That means you warn the lead, and then you close the sale and immediate after sale. Then the 4-step process. Normally we expect an 8 into 8 matrix. So this is the general tendency in the insurance space across the world, and it's called 8 into 8 matrix. A person who is new into the sales part of insurance, 8 into 8 matrix means you have to have 8 contacts and talk to them or meet them at least 8 times overall. So in an 8 into 8 conversation that you have, that means 64 conversations, there is a good possibility of you closing one sale. That used to be our mantra every time. So we use it every time whenever we do insurance sales for a person who is starting. We give him 8 into 8 matrix, and slowly then move into 6 into 6, and finally move into 4 into 4. So 4 customers, if they are talked to 4 times, that means in a 16 activity matrix, you will be able to close one sale. That is the basic thing. So which we talked about just now, this is the new sales process that has changed. So preliminary information, marketing, basic research, product design, then other pre-sales activity, assessment of risk, underwriting and all this, then completing the purchase, sale, contract signing, then policy administration and all this post-sale changes, which I talked about, the 4 processes. Yeah, so this is the basic process of it. Now, delivery process, what happens? How do people deliver this? That means the distribution, basically. What is it? So as I said, there are 2.5 million agents in India itself, banks and other institutions, brokers. The difference between a broker and a bank or any other agent is the agent represents the company to the customer, whereas the broker represents the customer to the companies. So that is the difference. So a broker is much more concerned about the customer, whereas the agent is concerned more about the company values to the customer. This is the difference. When the technology-based sales started coming in from 2010, we call them web aggregators and online sales, which we are going to talk about how they have made a difference in the technology processes, how they are made. Now, what is meant by a web aggregator is, I'm sure all of you would have seen advertisements of Policy Bazaar and maybe Turtle Mint. Now it is coming out. You have seen now technology-based insurance distributors are coming on to the advertising platforms. Policy Bazaar, you would have seen, Turtle Mint, you would have seen, CoverFox, you would have seen. These are some of the companies which are there, which are advertising that. The reason why advertisement is required dramatically for insurance distribution is because nobody buys. So you have to get the customer onto the platform. So that is the largest cost that happens. So web aggregators means people who can aggregate the customer onto the web by advertising. So that is how you generate a lead. Then the sales process is online. That is the 8 into 8 matrix which we talked about. So the traditional modern distribution channel, this is what it is, which we just talked about. You know, you have agent, broker, retailer, bank. They directly do customer to insurer. So in between there are intermediaries and there is a man-to-man marking. So it is human interface. So that is why sales is a very difficult part here, where earlier phase before 2010, there was no technology requirement there. So people used to talk, you know, it has to be a manual process. So if I had to close one sale, I had to do at least 4 contacts, sometimes 8 contacts into 8 times. So 64 matrix I used to do. So this is the traditional model used to be agent. This was only up till 2000. There was only agent. Then these started coming up. So if you look now, agency is still around 50-60% of the total business, and 50-60% of the other 50% of the business comes from the other intermediaries. Okay. So this is just the distribution mix which you're talking about. Agents, how much do they sell and how does it happen? Okay. And if you see individual agents is 65.9 and 40% is from others in the life side. The general insurance is a little bit more. Individual agents is only around, let us say 30%. The direct selling is around 28 because general insurance is a 1-year product. So that is why this is simple. Now, how does an Indian consumer behave? So references based purchase based on requirement. So customer today, 35% wants to make an informed decision. So that is why you have all your apps and all where you go and make an informed decision. What earlier it used to be word of mouth. In my days when we used to buy a ticket, for example, we don't go to any app or anything. We just go to the theater and buy. Today, if the children want to go to a movie, they will have information about IMDb rating. They will have some feedback from somebody. They'll talk to their friends on maybe WeChat or what should I say, our WhatsApp and all, and then they'll come to a conclusion, and then they make an informed decision. So 35% growth in searches for product reviews have happened through informed decisions that we have to make. 120% want to make a faster decision. In olden days, to take a ticket in a theater, we used to stand outside the theater for maybe, if I have to go first day for show, I was a great fan of Chiranjeevi. So if I want to watch a Chiranjeevi movie, we used to stand in the morning at 6 o'clock, 4 o'clock to get a ticket. Nowadays, it is same day shipping. You just log in, you buy and do that. So, and 60% want to have a tailored experience. So once we went into the theater, we didn't know anything. No, we used to have an interval. We used to come out and then go back. And today, what all you can do, you can buy your popcorn. You can do so many other activities on the net. So we want to have a tailored experience. And that is how 60% growth in searches, for me searches, it has happened. So just to give you a buying journey of how it happens, the red line shows an example of a buying journey instead by a mobile advertisement. Okay, and the blue line shows the journey through an online purchase. So if you look at it, post rating and review, everything happens on the internet. Whereas if you're buying a mobile, okay, the liaison with loss adjuster and all those things happen across the call center or through an agent broker. So some of the things happen online. Majority of the things happen online through an online purchase, whereas in a physical purchase, you are going to check everything physically and then buy online. So that is the basic difference between the two. Now the technology interventions on the insurance side. This is our major topic, which is part one. The initial part was basically the introduction to the insurance piece, how it is sold across the world. And okay. Normally across the world, the largest insurance business is around in South Africa, which is 15% of their GDP in terms of percentage of GDP. In India, we are still at around 3 to 4% of GDP. So let us say our GDP is around 2.5 trillion. Let's say 3 trillion at least. It's going to be 3 trillion GDP because of COVID we had. Let's say around 3 to 4% of that. That means around 12 lakh crores in the insurance market. The same way in US, it's around 7-8% of their GDP. In developed markets, it's around 7-8%. In South Africa, it's around 15%. Whereas in India, we are at around 3 to 4%. That is the gap that is there in the Indian market. So what are the technology interventions that have happened? If you look at the technology interventions that have happened in the last, let's say 7-8 years, so maybe around 2012, insurance on the web, insurance through mobile devices, and role of big data in insurance distribution. These are the three areas which I could combine it into and say, okay, this is what has happened, technology interventions that have happened the last 7-8 years, or let's say 10 years max. So what are the things, what are the various activities that are happening on the web? How is web changed the insurance sales process? Or how is web changed the insurance, or what should I say, the insurance as a product, how it has changed? How do people view it? The first step that has changed is the preliminary information search. That means today people go onto the web and check what is the insurance, how is it, and all. Social media interactions, a lot of things happen on Twitter. You see a lot of advertisements. Then purchase and sale online. So if you are buying especially a product which is like a motor product, many of the people want to purchase it online. Then there is a generational effect. As the generations are changing, ages are changing, which I'll explain shortly. Then the online purchasing capability, a lot of transactions happen online. So the olden days of giving a check and all that are gone. And then post-sales activity, everything is online. So let me give you a brief about each one of them, how insurance happens on the web. So internet is transformed in all stages of insurance. Preliminary information search, gathering online information is often a key step in the pre-purchase process, although there are regional countries that are driven by factors such as regulation. In India, what the regulation says is whenever somebody is searching for a price of the product, we need to give comparison of 5 different companies. That is what is called a price comparison website. I'm sure all of you would have seen. You can just check Policy Bazaar or any one of these websites across the world. There's beautiful websites called Lemonade and so many of them which do well. The market trend is very widely across, but they're becoming more important to us. What is happening in India is still we have not changed our old way of buying. What happens in the insurance space is people go to the web, especially educated people, knowledgeable people. They go to the web, they check the pricing, and then go back to their individual agent to buy the policy. So they have information with them, and that information they use to bargain the pricing with the agent outside. So that is what, because at the end of the day, what happens is our servicing standards through online mechanism have not changed dramatically yet. So that's the reason why the local people or the individuals feel that doing that right across through their normal agent is the best possible way. That is why it happens. Okay. The internet is also becoming a trusted source of advice, and online insurance can be more easily matched to consumer specific needs. So the first company which has now become a unicorn in the distribution space is Policy Bazaar. It's around 70,000, 80,000 crores. Last 2 months back, they had an IPO. Now there are a lot of companies on the tech space. InsurTech is going to be the future if you are really looking at a great career ahead in the BFSI space. InsurTech, banking has got its own technology, but InsurTech will be a very large space if you are looking at something very exciting and entrepreneurial nature. Similarly, information advisor level online for small businesses, comparison websites are sometimes also seen as a destination for advice. So preliminary information search. Social media now is playing a growing role in pre-sales activities, including the dissemination of advice as well as sharing of risks and negotiation of better and cheaper cover for members of a social network. For example, let me give you one small example, which will maybe a source of excitement for me. Because when I started a company called GeoSansar, what was the meaning of GeoSansar was I wanted to see that the poor people across the world, especially in India, okay, let's say my mission was to be across the world, but let's say I started in India, I started in Hyderabad. I'm sure many of you wouldn't have seen this particular institution because you don't fall into that market segment. I used to have 140 branches in Hyderabad alone. And nearly I used to have somewhere between 6 to 7 lakh customers in Hyderabad alone. Now, who are these customers? These are customers who unfortunately do not have the confidence to go into a bank to do a banking transaction. Now, who are these people? For example, in your home, you have a servant maid, or you have a driver, or you have maybe some of you might have a gardener, somebody like that. Your parents pay them through what? They pay them through cash. Now, when they pay them through cash, how do they save? Because they don't have a habit of saving, neither do they have any, any route to save, because they're very afraid to get into a bank. And suppose, even if they say, let us say public sector banks, which are there, supposed to service people, State Bank of India or somebody, they feel they are all set up in, air conditioned offices and all that. And these people feel very, afraid to get into them. So we had to do something different to them. So what I did was, I used social media to connect to various people to see that they do not give cash transfer to their people like in these levels, which is basically driver, servant maid, or somebody like that. They basically tend to open an account through social media and Facebook and put the money into that particular account. That was the way we use social media to change the attitude of people. Now, many of these people, unless they feel the cash, they don't really believe that money is credited into their account. So for them to feel that, what we had done was, we had opened physical branches in the areas where they reside, in Mofsil areas. Effectively in Mofsil areas where they reside, we used to open branches, and we used to recruit employees from basically son of the soil type. So the person actually comes from the same Mofsil area. So people believe that, okay, he's not going to cheat us because he's from our same segment. And they also used to feel that statement because there used to be an SMS going to them, this much money is. So this is just an example how social media can be used to change the way people do their financial transactions. See, one of the things I'm sure all of you know, the Nobel Prize winner from Bangladesh. I had an opportunity to meet him once. He was the microfinance institution. I keep forgetting his name. I'm sorry. So it's just available on the Google. If you just type it, you can get it. He started a bank called Microfinance Bank. Now, he once told me that poverty, when I asked him, sir, how do you elevate poverty, or why are people poor? So he asked me what could be the reason. So I gave him a number of reasons. Like if I ask all of you, you'll also give me a number of reasons. But he came out with an exciting story. He told me that the reason for poverty is not that people do not know how to earn. They can easily earn. They can do something in their life and earn. They can run a rickshaw. They can pull a, maybe a trolley. They can do a gardening. They can do, washing the car. They can drive. Something they will do to earn an income. But the major reason for poverty is because people don't know how to save. They don't know where to save. They don't know how to get an interest on an income, how to make their money sweat. So he said, if you want to do something in that segment of the society, you have to show how to save first. So that was the idea how I formed GeoSensor. That is where we started, and then we took it up to a certain level, and then we had to sell that company out because of various reasons. So that is where social media plays an important role, because there are influencers, people like us, we are all influencers, and maybe your family members are influencers, and we connect to them using social media, telling that why do you pay in cash? Why can't you do the internet transaction and make an account opening? For example, I have in my new office which I started, I have a boy who takes care of our tea and other requirements. For him to open a bank account, it took him 65 days, 3 months. He was always asking me, please give me cash as my salary, give it to me and all that. So finally, last month, I had told him, unless you open a bank account, there is no chance of you getting salary. I delayed his pay by 3 days. Then suddenly he went and opened the account, and now he sees the benefit of that. So that is where we have to, a lot of us can be of use. So some schemes allow individuals to share possible losses up to the level of deductible in a standard insurance policy. Commercial side risk pools also receive a boost. Insurers themselves are increasing the use of social media. Digital pre-sales interaction is expected to increase. So before the sale, a lot of interaction that we are going to have on the social media. Third is completion of purchase sales online. I'll go a little fast because the time is a little short. So we'll try to, and then we'll ask for questions, then we can discuss that. So some reluctance is there still to purchase online, because people believe that if you're going to purchase online, your servicing might not happen in most regions of the world. But as I said, over a period of time, slowly, everything is going to become online. Like now what you're doing, majority of the things you're doing online. So this also is going to become online. So the completion of purchase will also be sales online. Yeah. The generational effects, younger generations are more likely to purchase insurance on the web, although consumers of all ages are becoming more comfortable. Absolutely. So those are the generation effects. People of your age, all the college students, they want to do everything online. They want it instantly. The instant gratification is of very high competence nowadays in servicing. If we don't do instant gratification, then things will not work. So that is one thing. So online purchasing capability, while online price increasing, is still not available for many insurance products. More advanced in developing, perhaps reflecting the impact of new insurance in the region. Social media is a strategic priority for insurers. Traditional intermediate digitizing their business model. So traditional interior means people who are doing through agents. Today, what they're doing is they give them an app, and this person go in the agent. There's a lot of development that is happening on the insurance sales side by using technology. You can even track down your sales force to understand what is the help that they require before they close the sale, or various ways of doing it. So one of the ways is digitizing the entire sales process. Post-sales activity, internet is given for some polls such as coverage, verification, and policy. Development of online will not proceed in linear fashion. Globally, more of the process will migrate online. What we introduced in India was a post-sales call. So once the sales happen, we used to call from the head office. It was introduced by Birla Sun Life, and I was there as one of the employees there. So we introduced this call saying that, okay, because insurance is a new subject for all of you. So once you buy it, we are going to call you and ask you. So this is a product which is very long-term. Please understand, this product has got certain features which no other product has got. This is very long-term product. You buy the policy maybe 5 years. In my generation, long-term was 15 years. Maybe in this generation, long-term is 5 years. So the product is actually 5 years, 10 years, 15 years. And the interaction with the producer is very less. Only once in a year you interact, or when you have a claim, you interact. So it becomes necessary for the producer to interact with the customer at regular intervals. so that to keep him updated on what is happening on the product. So that is where the entire challenge lies. That is where the technology is going to be of great use in this business. So mobile devices, insurance through mobile devices, that is the second major thing that has happened. Mobile-based telematics, smart mobile distribution, beyond internet access, tailored design features, and basic mobile distribution. So let's go ahead and understand. Mobile technology allows customer interaction anytime, anywhere. Mobile-based telematics technology mobilizing the data collection and has enabled innovations in usage-based insurance, particularly in auto, where premium rates are linked to driving behavior. So today, if you go in advanced countries, still not in India, it's going to come shortly. Based on your driving skills, based on your driving number of tickets you're going to get, or whatever speed limits you're breaking and all that, your insurance premiums are going to be decided instantly. That means if you are driving somewhere, suddenly you might get an SMS saying that your premiums have been increased because you jumped the red light in certain area, or you have just missed this particular thing, you bumped into something and all that, because you are being tracked everywhere. So people know exactly what you're doing. So that is what telematics helps us in. Telematics is also risk reducing behavioral change because you are being monitored, especially Southeast Asians. I'm sure some of you are psychology or sociology students. If you are psychology, sociology, you will agree with me that we are a society which believes in being monitored, right? So when we, all of us, when we are standing at the red light, if the police is not there, we on our bike we just speed away. Whereas if there is a police there, even in green, we will look at him twice and then go. Where we believe that a policeman is basically monitoring us, so we require monitoring as a major tool. So telematics should move beyond auto to life and health and property lines. Smart mobile distribution, smarter required understanding user needs on the go. If you today have Ola app, or you have a Swiggy app, or any one of these apps, you will see that what should I say? In an Ola app, when you do an Ola transaction for going from one place to another, they also sell insurance for you, right? And if you're buying a ticket, Abhi bus or something, there's also insurance policy available. These are all on the app. So this is how the mobile devices are changing. So beyond internet access, mobile data allow both passive and active data submission by consumers. Smartphones also facilitate distribution via social media. Tailored design processes. So today we have designed a product. I can share with you one product which we have designed for our customers, which is called funeral insurance. I don't know, it is still not there in India. So we just started. I don't know how many of you have seen the second wave disaster that this country had. A lot of bodies and all were not given the normal due, rights. So they were all left here, there, in Ganges and all that. We could see them. What is the reason for this? The reason for that is there is not enough money to spend even on a funeral. Okay, so we designed a product called funeral insurance, and it's fully technology based, especially for poor people or people in the marginalized sector. I should not say poor people, in the marginalized sectors. What effectively happens is, if the nominee is sending me a message saying that something has happened to the policy owner, instantly within 10 seconds, money is deposited in his account. So that's the product which we have built for our customers, and it is working very well. So the first 1/3 of the money is paid to them, and the remaining 2/3 is paid after 10 days, normally or therapy or something that we have. So we do that. So that is how we have designed the features by using mobile applications and all that. Now, basic mobile distribution, is nearly equivalent to our population or more than our population. All of them are standard features. So you have so many other things which you can do. You have embedded insurances, you have premiums, so many other things. And especially if you see in Africa and other places right now, I don't know how many of you are from an agriculture family. If you are there, then you will see that majority of, in earlier days when we used to do what should I say, cattle insurance, they used to plug the ear with a what should I say, with a device which basically used to, because the ear is dead tissue. So people used to do fraud by cutting the ear and giving the thing. So today what happens is there's an injection that goes into the body of the cattle, and there is a small chip. The chip basically tracks the cattle. So that is how we have gone ahead by using various devices. The role of big data, that is the third part in technology interventions in the insurance space. Role of big data, increased consumer centricity, micro market segmentation. That is the area which I am very familiar with, the micro market area, which we will talk about in our part 2, predictive modeling, real-time underwriting, improved efficiency of decision, customer retention, returns on big data investment. So returns on big data investments are under. Today also majority of the insurtech firms are making losses. So nobody is sure how they are going to turn up, but there's a lot of market available. So there's a huge opportunity available. So increased consumer centricity. So data analytics has always been a core competency of insurers, but more convenient in marketing and distribution. It's a holistic consumer-centric approach to distribution compared with some engineers are lagging investing in big data. Today, if you see how do we use big data is that, for example, in my company, in the last 1 year, we have added nearly 400,000 customers. So today I'm working with a very international firm where I'm trying to build an analytics platform, which basically decides what is the type of product that a person would require as the age is progressing for a certain person. So if, for example, Miss X is joined and it's taken a policy at an age 25 or something like that at such a level. So we are trying to build a particular model with the help of one German tech company, where we are deciding that, okay, what could be the products that should be showcased to this particular person as she progresses in age, and as she progresses in age, 2-3 things will happen. One, her demographics will change. Second, her monetary situation will change. So based on these two characteristics and at a certain market segment, how is it going to change? That is what we are working on. So that is one. So that is increased consumer centricity. Second one is micro market segmentation. See, in the Indian market, there are 3 or 4 segments. As per the CMI data, if you see, there are 4 segments of data. One is the lower segment, which is covered by social sector schemes. Then the top segment where the insurance companies go there. So there's a between segment, which is called the micro market segments. And these are effectively underserved and unserved segments. They are nearly around 60-70 crores population. So this segment has been beautifully segmented and what should I say, serviced by microfinance institutions, especially in Hyderabad. How many of you know SKS Microfinance? I'm not sure. So this is one of the pioneering works that they had done. And a lot of companies are there like that now, which is in the NBFC space, MFI space, and they do a lot of work in there. So they took finance there at 30,000 rupees, 40,000 rupees, the average loan amounts with around 20%, 21% interest. Earlier it used to be 60-70%. Now the government has seen to it that it's come down to 21-22%. So that is how it is. Okay, so the micro marketing, which I'll just talk about in the next one. So predictive modeling, so you can predict what is going to happen. The COVID third wave, you have seen a lot of predictions going wrong. Second wave, third wave. So based on this, the next future, any viral diseases that are going to come up, there certainly will be models which are happening. And real-time underwriting. Underwriting means basically accepting the risk. That's what underwriting as a term means. There's a risk that you provide. So I am ready to accept that risk. Whether you fall into that risk category or not is the question. So we can do real-time underwriting by using big data, because depending on data today, there is a company in US, which was one of my old companies, institution, foreign institution, Legal and General. It's a UK-based insurance company, which basically came to India when we started India First Life. Now, these people have got a US-based company where by seeing the photograph, they will tell you what age you are and what are your lifestyle things and how much cover you can be given and everything. So you just have to take a picture in a certain place and then send it to them. That's it. They'll give you the entire. So somebody is working behind, that is, they have the existing data of UK customers and US customers, and they are effectively only in the risk side of the business. So that is how they're doing very well. So improved efficiency of distribution services, we talked about it. Customer retention and brand loyalty, we talked about it. As we are growing, we know the customer very well. So more we know the customer, better it is. Return on big data is uncertain. We are not sure at this point in time. The technology interventions that are happening are all cost-centered. They're more of cost-centric rather than highly revenue-centric. They're still not profit-making. So someday it is going to happen that it will still be money-making business, but right now it is a cost center, but we have to certainly do it. There's no choice. That is how. So strategic implications for insurance, these are the things. Responding to dynamic competition, another type of market entrance, emphasis on non-price differentiation, integrating multiple, upgrading IT systems, securing gains from innovation and new distribution platforms. So I will skip this particular thing. I will send this presentation to you because I think the time is getting over. So this part I will skip because these are not linked to technology, but certainly linked to the insurance business. So this is part one. Now let's go to part two. The part two is what I do, how I have built my company in the last 18 months. What is the model that I have seen, how I'm using technology to build. So this thing is we are in the micro insurance space. So what do we mean by micro insurance? It's the protection of low income people, those living on between approximately $1 and $4 a day. So 75 rupees to around 300 rupees. That means we work in segments where incomes, household incomes are somewhere between 50,000 rupees a year to around 150,000 rupees a year. Okay. So this is around 70 crore of our population. And again, specific perils in exchange for regular premium payment proportional to the likelihood and cost of risk. They are also having a lot of risks. And these risks are very, what should I say, very catastrophic in nature, especially, for example, people like us, the population which I'm talking to, I'm sure you can take care of certain pitfalls in life. But these are populations which can never take care of any pitfalls in life. Once they hit a certain, some sort of catastrophe, some sort of event that happens, negative event that happens in their life, that's a total catastrophic event for them. And they can never come out of that. So that is what happens. The target population typically consists of persons ignored by mainstream commercial and social, as well as persons who are not given access to appropriate insurance products. So as per the regulator, which is IRDA, IRDA is Insurance Regulatory Development Authority of India. Any cover which is around 200,000 rupees is basically less than, this comes under micro insurance space. So what have we done? We realized there are 70 crore population. This 70 crore population, nobody is reaching them. They are not able to buy because that's not happening. So how do we reach them? So we took an example which has already been done. That means the microfinance institute, the financing is already happening to this place, to this segment. How is it happening? There are a lot of institutions that are already working in this segment, which could be non-banking finance companies, regional rural banks, microfinance institutions, societies, trusts. There's so many people who are working. What should I say? Community institutions, religious institutions. There's so many people who are working in this segment to uplift those segments of the society. So they are doing either by education or by financing or by so many means. So what we thought in this organization, when I started this organization, was we should approach this segment not directly because we will not be able to match that cost of reaching them. So we should only reach them through these institutions which are already working. That is what we did. So further than that, there is a substantial increase in spending power from 23,000 to around 85,000. Now it is around 95,000 if I'm not wrong. And rural consumption is growing at around 19-20%. That is what is happening. So this is the background with 57% of the Indian population, which is there in that segment, don't have access to a bank account. They don't know how to save. They don't know how to do this particular. And forget, if they have money, they will either buy a small piece of gold or whatever it is, but they will not save in insurance space. So it was a very difficult proposition that we had. So what have we done? This was the opportunity for us. When I started this organization called MicroInsure, this was the opportunity. 600 million people, extremely vulnerable to calamities, illnesses, accidents, which can push them deeper into poverty, virtually neglected by both the insurance measures and state social insurance scheme. State social insurance scheme is basically the government insurance scheme. All of you know that the Telangana government has got a Jeevan Bima scheme, and Andhra government, some of them have got schemes which take care and all that. So represent an estimated 1 lakh crore market. Then what has happened? This is how we move to microfinance institutions and small finance banks. So this is our basically mission. This is the company's mission, that we do not have to engage in grand heroic actions to participate in process of change. Small acts, when multiplied by millions of people, can quietly transform. We built the first transaction sometime in December of 2020. How we are going to take it? We worked with one institution in Tamil Nadu, and then we built the technology for them, and then we are now expanding the same technology to everybody to take that particular thing. So this is my logo, the company that we are doing. So technology consulting, that's the business model distribution. That means we build our own technology through which we take it to the customers, to these institutions which build it to the customer. The customer has got an app where he can see his own insurance policies that his institution has taken for him, and he can also build his own policies onto the platform, so he can do that. So we build new products. For example, we built a product for schools and colleges, which are still not launched. We are waiting for it to launch, where once the schools and college, maybe next year we are going to launch. What we have realized is there is a data which is available that 60% of the people stop their education at 6th standard, 7th standard, because the earning member of the family actually is not able to support them because of the 4Ds which I discussed. So we built a product saying that we are going to support the student from KG to PG. If in case something happens to the child because of these 4 reasons which I talked about, and at a very less premium of nearly 2 rupees a day or 1 rupee 50 paisa a day. So they just have to pay that, and his education, his or her education will be taken care in that particular institution from KG to PG. So that type of products we are building. We built another product for people. Just now we talked about underserved people, which government takes care. Let us say there is somebody who is got operated. Now for the next 15 days, the person is not ready to, is not able to earn an income. Now these are people who are in the in the daily wages sector, so they don't get income. So we have built a product to support these segments to, when they are sick, they get an income into their house so that they can run their families. Now these are all I cannot sell individually because the premium sizes are so small, the distribution costs are very high. So we have built a technology platform, and these platforms we are giving to institutions which are working in that segment. So they take it to the customers. So the products are designed and put on the platform. That is how we are building. The technology, this is the type of technology that we have built. It's a simple view across all platforms. You can see it in 8 languages. Okay, mobile enabled systems, service and platform. It's a high volume system, nearly around, we add 2 to 2,500 customers a day at this point in time. Every day we are adding new customers. And it's an integration system with the core product, high volume system, quick launch of products, learning and training, agile claims platform, zero paper. No paperwork at all. Everything is online. It moves from one end to another end. So we call it 3 parts: a responsive front end, speed efficient and agile system, and high volume systems. So these are the 3 parts which make the entire technology. So which I talked about the distribution. I think the technology is put on these institutions, and they basically do the sales on that. So because we took this technology and we're giving it free at this point in time, there are a lot of institutions that are working with us. Nearly around 80 institutions are working with us in only 3-4 states which we have talked about. So the operations piece, which I have talked about, when we have technology, instant gratification of the product happens through the technology. So customer gets an instant, when he pays premium or the money, he gets instantly the service that he ought to have. So that is instant gratification. That means the policy is issued across the counter. So let us say we buy a TV today, we expect the TV to reach home by evening at least, or we take it home in our car. So here in this place, normally what used to happen was they give the premium, that is the money, and then they get the policy after 15 days. So now what we are doing is we are giving it instant. Claim service, where somebody has to call to some call center to give a claim. So what we have done is we have used technology to basically see that the claim servicing happens at the end of the customer. So he just has to take a photo and put it onto the platform, and the platform takes it to the insurance company, and money gets debited from the insurance company's bank account and gets credited into the customer's nominee's account with an SMS going to the nominee. Okay, the long-term focus on this business, because this segment is very large, so there's great opportunity across the world. It is very large. We have nearly 3 billion population in this segment across the world, especially in ASEAN, then Pacific Rim, then Africa, all these places, Latin America, then East Europe, then Caribbean. A lot of opportunities are available in this segment. There are very few companies available which are doing this work right now, but I'm sure for a period of time it's going to happen. So summary for you: a quiet revolution underway, technology and reconfiguring the traditional insurance model. That means the traditional insurance model is basically selling through agent. Now it's moving fully to technology. Technology assisted sales models are the latest trends. But over a period of time, it is going to be fully technology. Internet and mobile devices are impacting this, but the overall share of e-commerce sales is still low. That's what I told you. They look into the pricing, and they go to the agent and buy. Nonetheless, new technology is fundamentally changing how consumers and firms interact with insurers. Combined with big data, these developments are prompting far-reaching changes in insurance. The direction is clear. New technology will eventually enable customers to arrange most of their insurance through remote digital channels. For a period of maybe 10 years down the line, you'll see that majority of the insurance sale is going to happen through technology. So from a fully manual mode in 2000, within 30 years, the entire models are changing dramatically. Intermediaries can still pay, but will need to adapt to the customer's changing need and preferences, because customers would like to need to want more information before they take a decision that the companies, intermediaries have to provide. As competition enterprise insurance, strong brand, technical know-how will thrive. Though to successful innovation distribution requires a culture that fosters experimentation and failure during the design process. So a lot of companies fear to fail, but institutions which are going to think that failure are the stepping stones to success, these are the people who are going to succeed in the long run. So this is what I just took a statement from Dr. Andrew Cooper, who is the president and CEO, founder of Leapfrog Venture Capital Investments. What he said was, I had an opportunity to meet him in my earlier stint in one of the companies. So he said that microinsurance is that which means swiftly, microinsurance is both profitable and scalable as long as it is technology driven. So this is the second part, and that's the last one. Yeah, Dr. Mary.
Thank you, sir.
I'm sorry, but it's been pretty large presentation with a lot of data. I think any queries, any questions, I'll be very happy to.
Yes, sir. Girls, if you have any questions, anything in general about insurance also, you can please interact with sir. You can please mention your questions in the chat box.
No, ma'am, they can able to unmute themselves, ma'am.
Okay, you can unmute and speak, girls. Okay, ma'am has also put a feedback link in the chat box. I kindly request students to give your valuable feedback before the session closes. Sir, I have a question from my side, sir.
Yeah.
It's a general insurance related question. Sir, why there are some illnesses which are not covered in medical insurance? Like most of the private insurance providing companies don't include some kinds of illness into the coverage.
Okay, so there are two types of products. One which accepts with pre-existing diseases. The other one is without pre-existing diseases. So you should take a product if you have some, for example, let me tell you about myself. I'm a diabetic for the last 28 years, 24 years. So when I go to the insurance company, I tell them very specifically that I am diabetic. This is the type of medicines that I'm taking, and this is what it is. So when I tell them, they automatically say you might have some pre-existing diseases, so they might jack up my price. So that is what happens. So that is what you need to tell. So when you tell them that you have some pre-existing diseases, those diseases will also be covered, but with a certain increase in price. So it is called PEDs. You need to ask the insurance company that I have these pre-existing diseases. Can you please come up? In some of the policies, for example, maternity is not covered.
Yes, sir.
Yeah. So if you don't ask for maternity, normally the pricing is lower. So your agent might be trying to fool you by saying, this is premiums are lower, basically because the maternity is not covered. But normally in many of the cases, maternity is covered from day zero. So from the day you take the policy, the maternity is covered. So those are the things which you need to. So you need to see in the policy wordings. So what product features basically are being given to you. So all the things are covered. There's nothing which is not covered. It's just that the product features to reduce the price. Somebody is trying to tell you that this is a cheaper product because the cheaper product will have lesser features.
Okay.
That is it.
Thank you, sir. Thank you so much.
No.
Girls, any other questions? You can please ask, sir. Okay. I think, okay, somebody raised hand.
You can go ahead, please.
Yeah, who's this? You can please unmute and ask. Rajeshwari, who's that? If we can check, somebody raised hand.
Yeah, ma'am, 1 second. Yeah, Srikala ma'am wanted to ask.
Okay.
Yeah, ma'am, you can unmute yourself, ma'am.
You're unable to unmute.
Yeah, thanks, Raji. Thanks, Francina.
Yeah, ma'am.
Good evening, sir. Sir, it is an extension to the question Mrs. Francina, Dr. Francina has asked. That is mainly some diseases like especially there is no insurance for dental problems, if I'm correct. Many insurance policies.
See, what happens, madam, is that, for example, you want to do let us say, you are in the business of entertainment. Let us say, you are a movie actor. So you want to do some, changes to your structure of your job, basically because somebody would have suggested or something like that. That is not covered.
Yes.
Now, for example, I meet with an accident.
Yes.
Okay, and then my jaw is broken. And my teeth have fallen off. Okay. Now the restructuring of my jaw is covered in the policy.
Is it covered, sir?
It is covered.
Okay, only.
That is first type 1.
Right.
Type 2 is, the other type is, the second type of product is that you want to do some work, normal work on the dentistry, normal dentist issues. For example, I have a teeth which is, spoiled and I want to remove it.
Yeah.
Now, tomorrow I want to remove and today I go for a policy.
Okay.
At that time, it will not get covered because you know that the incident is going to happen. So
and then,
so what they do is they'll give you a 1 year off.
Yes, sir.
Okay. So effectively, when you are buying an individual policy, it might be for 1 year or 2 years, your pre-existing diseases might not be covered. So your pre-existing problems will not be covered. Whereas one more option is available. All the professors of St.Ann's College can take a policy from them. Where from day one it can be covered.
Yes, group policy.
Group policy you can take.
Yes.
And all of you, because you're all professors, you can all take a features, you can take a product. So these are basically product features.
No, yeah, actually, I do understand, accept the conditions, what you mentioned. If we are going for purely cosmetic things, definitely not to be covered. But as the other organs, even teeth also get decayed with the age. Teeth also will get problems with the age. So if not an accident, but a naturally decaying teeth after say 50s or 60s, will that be covered?
It is covered.
But why, sir, the policies what we take, they are mentioning?
It should be there in your product. You would have taken a product which are not covered.
Oh, but okay, I should verify back because we are thinking that we have taken a very robust policy, but I should verify it.
A lot of things, please understand, for example, cataract is there. Earlier, cataract used to be an operation. Nowadays, I think with one brush and all, they remove it and all. That's what somebody telling me. So these are all daycare procedures.
Yes, sir.
Because they are daycare procedures, they will in some of the products they will not be covered.
Yes.
So you need to take a product where daycare procedures are covered.
Yeah.
So that will
Sir,
take care.
sir, one more small thing, can I?
Yeah, please go ahead.
Yeah. I mean, after 3 years, not PEDs, but some sudden diseases are cropping up. Will they be covered?
Yeah, all this is covered. See, for example, COVID related, nobody
Yes.
knew before 2020 there's something called as COVID. So if you
Yeah.
had a normal health insurance policy, your medical bills and all would have been paid off till your amount, whatever amount sum assured
Yes. Yes.
cover
Yes.
you have taken, that would be paid off even by COVID. So it's a very similar process. That is all. See, the only thing is what happens is, madam, it is like people think insurance is like purchasing potatoes in a market. So one seller says it is 18 rupees a kg. Another person says it is 16 rupees a kg. So people buy the 16 rupees one. Surely there will be one potato in that which is spoiled, right? Unless otherwise the person will not give it for 16 rupees.
I know.
Right? So the same thing happens here also, because people think either they are not conversant or they don't want to read it or they don't understand. There's nothing to understand. You just have to go through the product features. Normally what we do in any product when we purchase a costly product, which is basically where our life is dependent on it, then we'll have to read it and then we have to understand the requirements, and your agent should be knowledgeable, whomever you are.
Research.
That is what.
Yeah. Thank you very much, sir, for your patience, responses, and
No
answers.
issues
Yeah.
at all. See, I'm very passionate. You would have come to know that I'm very passionate about insurance as a product.
That's what, and also you are very passionate about the society and weaker sections in all the aspects.
Yeah. So if you look
Idea.
at it, why we are like that is because we come from those sections, so we want to give back something. So there, as I told you, there are 2 or 3 things which we can do. One is educate them, second is cover them and protect them for the financial requirements.
That is truly motivating to all of us, sir. Maybe we join you in some way or the other.
Yeah, and I am not a NGO and all that. Please understand, I don't do anything
I
for
understand.
charity.
I'm thinking of academic association as well
No.
with you, sir.
What I'm saying is, I'm not doing any charity because I'm not a charity.
Yeah,
I'm not yet come to that.
I got
I'm not. In these segments, normally what people think is that you need to be an NGO or you need to be a no-profit organization or something like that to support these segments. Not necessarily, because it's a large market space.
Yes.
And I don't basically, I'm still not that age that I still want to get into any sort of, those sort of things. There are people who do it surely well.
Yeah.
But I'm purely a businessman on one side.
But
And
you
this
took a
segment,
socially relevant,
socially relevant subject.
Yes.
But it's not that we make some huge, we do something wrong to the people. That is the only.
Yeah. Maybe I'm looking forward for some academic association in future, sir.
We'll do that. See, if we are doing one very important project with SAS. Okay, so we are looking at people, in the 3rd year, 1st year, whatever.
I will get in touch.
Please see if you are interested. Then we can. They should be interested in analytics.
Yes.
And data management and all that. So we can put them as a trainee and all that. And
yes.
They will work with a German company called SAS. They will be with us, but they'll have to undergo training for 3 to 6 months.
Right.
And they're doing some very exciting projects in artificial intelligence and machine learning.
Thank you so much, sir, and for being here with us at St.Ann, sir. Thank you, sir.
Thank you, ma'am.
Thank you, organizers. Yeah.
Thank you. So I'm happy to propose vote of thanks, sir. I thank our resource person, Kamalakar, sir, for taking time for us and enlightening us about the product insurance, the distribution network, the technology interventions, and at a broader level, the micro insurance model. Thank you so much, sir, for spending your valuable time and giving us knowledge about mainly the insurance and major aspects of insurance. Thank you so much, sir. I thank our dear principal, Dr. Sister P. Amruta, for her constant encouragement to organize sessions like this for motivating our students to be future leaders. I also thank our college IIC strategic team for their motivation to conduct various activities for the benefit of students. I thank our incubation cell coordinator, Mrs. Rajeshwari, for all her meticulous planning of the event. I also thank the co-coordinators, Shailaja ma'am and Meeta ma'am, for their support in organizing this session. I thank student coordinators, Samantha Carroll, Asra, and Ashan for their contribution towards organizing the event. Lastly, I thank our participants for being actively involved in the session. Thank you, everyone. Have a pleasant evening. Thank you so much, sir.
Thank you very much, Dr. Mary. Thanks, madam. And all the good wishes to you.
Thank you so much.
Yeah, thank you, sir.